the balance sheet. So you're reviewing your own business's financial position, or maybe you're reviewing a large corporation's financial statements on the internet. You've looked at the income statement for a period. You've looked at the statement of retained earnings for a period. The next thing you might want to look at is that business's or your business's balance sheet. All a balance sheet is a summary of that business's accounting equation at a certain period in time. At a certain point in time. I'm sorry, not period. So notice I said point in time, not period. If you go drive around town, you will be able to take a snapshot of any business's balance sheet or accounting equation. The reason is, well, okay, just think about it. If you go drive in front of a big department store, at that moment in time, what is the value of all of its assets? And who has claim to all of those assets at that moment? So how much of that asset value is claimed by liabilities and how much is claimed by the owners? And of the asset value that is claimed by the owners, how much of that has come from external contributions from owners in exchange for shares in the company, common stock, and how much of that has come from equity generation due to operations, retained earnings? So you can answer all of these questions as of a certain date or point in time. The balance sheet is just a way for someone from the outside looking in, or for the owner of a company to see the financial position of that company. So let's get started. First, just like with the income statement and the statement of retained earnings, we'll put a title. The first line of our title will be the business name. Business name. The second line of the title is will be the name of this financial statement. This is a balance sheet. So this is this business's balance sheet. Okay. And the third line will be the date that we're speaking of. So the balance sheet might be different on, April 10th, April 17th. On one day we didn't have a building, the next day we bought a building, so our assets changed. The liabilities, assets can change as of any point in time, right? So you're not going to put a period here, you're going to put an exact date. Okay, so this will be on April, because these account balances are reported on April 30th, right? So this balance sheet is showing us the financial position of this company on April 30th. 2017. Okay. On a balance sheet, you will have three sections. You're going to report your assets, you're going to report your liabilities, and you're going to report your stockholders' equity. Assets on one side, liabilities and stockholders' equity on the other side. You add those two up to show that these two sides are equal, just like your accounting equation. You're just presenting your accounting equation in a report. Okay. So left side, let's report the assets. So assets, what is all of the assets we have and what is the total value of those assets? Okay. You'll learn later, you'll learn more specifics on this later, but with your assets, report first the most liquid of assets. So cash is extremely liquid. Liquid meaning how fast can you turn something into cash? So I can go sell a truck pretty quick, right? I can turn that into cash pretty quick. Maybe a land or a building, it would take a while to convert that into cash. Okay. So assets, cash. What is our cash account balance as of this date? It is $25,200. Okay. Next, usually after cash, you're going to report accounts receivable. That's pretty liquid because you're going to be getting paid cash soon. So accounts receivable. This account balance as of April 30th is $1,300. Okay, accounts payable, no, that's a liability. Stocks issued, no. Salaries, expense, service revenue. Office supplies and truck. Yeah, I guess, my intuition tells you office supplies is more liquid than a truck. But I mean, I don't know who you're going to sell office supplies to pretty quickly. I can go sell a truck pretty quickly, right? I would think, but I'm pretty sure office supplies in the book would put office supplies first, meaning that it's more liquid. So I'm going to go ahead and do that. So that's an asset that we have, office supplies. Okay, this is something of value that we're using to run the business. We're using these office supplies to create revenue, right? We're using it in our operations. We have $1,700 worth of office supplies, and then we have a truck, which we are also using to run this business, worth $14,320. Okay, so what is the total value of all of our assets? Total assets are equal to 25,200 plus 1,300 plus 1,700 plus 14,320 is equal to $42,520 worth of assets. $42,520 worth of assets. Put a little line here. Okay, so there's our assets section. Now let's report our liabilities. How much of these assets are claimed by liabilities? Liabilities. Okay. What are our liabilities? Accounts receivable, no. Accounts payable, there's a liability. Cash, stocks, dividends, no. No. So, okay, we have one liability. We have an accounts payable of $700 as of April 30th, 2017. So we have an accounts payable balance of $700. Okay, there is our liabilities section. Okay, the final section of your accounting equation, assets is equal to liabilities plus stockholders' equity. Now, if this was like a sole proprietorship, a private little business, you'll see, go drive like a little garden center or something down the road. This wouldn't be stockholders' equity; it would just be equity. But we're dealing with corporations in this book, so stockholders' equity, okay, is reported. You can break this section down into common stock and retained earnings. So let's report the common stock portion of stockholders' equity first. As of this date, we have had $40,000 worth of external value contributed in exchange for stock. So our common stock account balance is equal to $40,000. Okay, what's next? Common stock and retained earnings. What is our retained earnings account balance as of today, as of April 30th? Okay, well, in the previous video, we solved for this balance. It is $1,820. So retained earnings, $1,820. Okay, the next line, what you want to do is add up common stock and retained earnings and report a line that shows total stockholders' equity. And then the final line will add up stockholders' equity and liabilities to show that the two sides of our accounting equation are indeed equal. Okay, so this third line here is total stockholders' equity. Okay, 40,000 plus 1,820 is equal to 41,820. So this is just giving you now a visual
of, okay, well, how much are our liabilities? How much is our stockholders' equity? Now let's add up these two values here to just prove that our accounting equation balances. So this final line would be total liabilities and stockholders' equity. Okay, 700 plus 41,820 is $42,520. So there you go. The two sides of the equation are equal. There is your balance sheet financial statement. And you can just look at this and see this is a nice report that's an external investor or an external creditor or even a business owner can look at. This is really nice. It gives you a good understanding of your business as of a date in time.